following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host for the show, David Blain. Thank you for joining us today on Cable TV 10 in New Bern as well as 94.1 FM WNBU. Welcome to our viewers and listeners. We've got a great show lined up for you, and if you're listening to this or watching it today, it means that you're still here. As last week, I predicted that the world was not coming to an end, if you recall. I don't do a lot of predictions, but that seemed like a pretty safe one to make last week, that the world was not going to come to an end, and that we would, in fact, be back here again next week for an exciting show. If you recall, it was last Monday that the Standard & Poor's downgraded the U.S. debt, and there was all sorts of speculation when I was recording this as to what was going to happen. On that previous day was the largest drop, or the sixth largest drop in the market, and I said some things such as the only thing predictable about the market is unpredictability. We advise you to not make any radical changes to your portfolio strategy. We talked about, people getting tired of hearing, to stay the course if you're a long-term investor. We talked a little bit about the some things like that. And, of course, I also mentioned that we had been encouraging, and we put in some fresh money to the markets last week, and it was a great time to buy if you're a long-term investor. Now, if you're a retiree and trying to live on your money, you probably shouldn't have had it all in the stock market anyway, but that's another story. Once again, the sticking to some sort of principle-based investment rather than getting caught up in the emotion of the moment is the best course of action. Now, we're not saying that the markets aren't going to go down again. Who knows? But the point is that up until yesterday, which was Monday, the market had regained all its losses from last week. A couple other things. One, this headline from Investment News from August 12th, rating cut working out just fine for the U.S. Treasury. Worries about default on government debt has investors clamoring for government debt. That's right. And the lower rates, when people flood to the Treasury, it drives the price down, and the government doesn't have to pay as much in interest. And so they did an auction the other day, and less than a week after the downgrade, they paid an average yield of 2.13% on 3, 10, and 30-year securities, less than May 3rd of 3% and below the former record of 2.59% in February of 2009. So the debt downgrade resulted a week later in the Treasury paying the lowest interest rate ever on a debt auction. Demand was also almost matched the record set last year. So good demand, low rate for the taxpayers. Now, we certainly do not agree with the the continual run-up of the debt, but when you look at it, 2%, 2+% borrowing by the Treasury is certainly not bad. The problem comes in if we don't get this under control, rates go up, and we're having to refinance this debt at a higher rate. It's kind of like if you own a home and you borrowed, you got your mortgage at 7%, and you look out there today and you say, wow, I can refinance to a 15-year for 3.5%. That's great. And you lock in your money for 30 years. On the flip side, let's say you get an adjustable mortgage and you lock in that 3% today for only 5 years, and then 5 years from now, you don't have the money to pay your house off, and so you're forced to refinance at probably a higher level. Well, that's what's going to happen to the federal government if we don't get this under control. But anyway, very successful auction within a week after the debt downgrade. So that's good news. And just out today, Fitch, one of the other three rating agencies, there's Standard & Poor's, Moody's, and Fitch. Fitch affirmed the U.S. at AAA and outlook is stable. They say, and I quote, "The affirmation of the U.S. AAA rating reflects the fact that the key pillars of U.S. exceptional creditworthiness remain intact. Its pivotal role in the global financial system and flexible, diversified, and wealthy economy provide its revenue base." And so, anyway, one of the other rating agencies, Standard & Poor's, gets most of the headlines. They're the largest, but not necessarily the best in a lot of people's opinion. But anyway, Fitch affirms the AAA rating. A couple other things I thought I might mention. There's a lot of talk about hedge funds and what they're doing and how they're doing, and a lot of people still looking at that. I thought I would just point out this. A couple months ago, we did a show on a guy by the name of John Paulson in the book The Greatest Trade Ever. If you missed it, I completely forgot. Our website, www.dlblain.com. There you'll find archived copies of the show. In fact, this one about John Paulson we did a couple months back is on there somewhere. If you have any comments or questions on the show, feel free to give us a ring, 252-633-0107. Our email is allthingsmoney@dlblain.com. And once again, the website, www.dlblain.com. Had a couple of comments recently. They said, "David, you never talk about your firm very much or what you do or things like that." And I said, I know, the show is meant to be educational just for the general population, give you some good advice to counteract a lot of what's on the media. But after, a couple of years of hearing people beat me up about it, I probably need to promote my own firm a little bit more. So anyway, go out there to www.dlblain.com and check us out. We've got a very compelling business model that is very successful. In fact, the Financial Advisor magazine just came out with its latest investment advisor ranking, and for the 5th or 6th year in a row, we made the list as one of the top investment advisors in the country. We were in around 421 in the country, but in the state of North Carolina, we were about the 9th on the list. And of those in North Carolina, the majority are in Charlotte, Raleigh, and so forth. Of course, as you get into the larger cities, New York, LA, Chicago, you've got a lot of investment advisors. And in Eastern North Carolina, of course, there's not a lot to choose from. So we're honored to make the Financial Advisor magazine 2011 top registered investment advisor list for, the 5th or 6th year in a row. So we're very, very proud of that accomplishment. So go out there on the web, check us out, www.dlblain.com. I think we've got a press release on that as well as other information about our company. Well, we're up on a break here. When we come back, we'll return and we'll talk a little bit about hedge funds and how they're doing in the year 2011. So we'll be right back after this message.